How's it going, Josh?
Good.
Thanks for being with us today.
Thanks for having me.
And as Ryan mentioned earlier, Josh is a partner at Greylock VC. And previously he was at Facebook, he was at LinkedIn, and Twitter, all involved in product and growth. And so it's really an honor to have Josh on stage. He's really got an amazing experience, both in startups and both in the big tech giants that really influence the marketplace. So today, since we have some people here that are maybe not as familiar with Silicon Valley, we're going to kind of talk a little bit about what's behind the secret sauce of Silicon Valley, and maybe what are also some of the challenges and threats to this amazing thing that is Silicon Valley. So just to like get started here, Josh, what do you think? I mean, obviously there's so many things, and you can answer this question 1,000 different ways correctly. What do you, in your words, what is the secret sauce behind what Silicon Valley is that has been able to create, so many successful companies, some of the most high-value companies in the world that have made huge impacts? Why do they come from Silicon Valley more than any other place?
The first thing I would say is it's not clear to me they come from Silicon Valley more than China. China, at least, is also become Beijing and Shenzhen and Hangzhou with Alibaba have created some giant companies too. So I don't think we're just Silicon Valley, but I do think there's something special here that's been in Silicon Valley for a long time, which is this sort of sense of vision of belief, and this belief that if we create this thing, we can see it in 50 million users' hands, 100 million users' hands, 1 billion users. I remember in the early days at Facebook, and I worked at these companies, you call them tech giants, but when I worked at all of them, they were still more like small upstart companies. LinkedIn was 15 people when I joined. Twitter was like 80 people. And this kind of fight of like, someday we'll be something. And it's amazing to kind of see what they've become. But they talked about it at the very beginning. They always said, look, could you imagine a different world where we are always able to update our friends about what's going on and everybody can check in and see what's going on? And I could imagine 1 billion people doing that. And in most other places in the world, when you say something like that, people think you're crazy. And when you say that here, people think, oh, that could work. And you don't need everyone to think it could work, but you just need a few. And you need investors who will give you enough money to hire. You need to be able to use that money to hire great people who will believe it can work. And then you need to do a couple things and say, whoa, that first thing we did worked so well, let's try something else. And let's try something else. And you just have this constant experimentation, but you're always aiming for this imagination thing. In other places, and just what I've heard from people who've grown up or even try to build companies in other communities, when they go and say, could you imagine this new media property being in like 100 million people's hands every single day? They'll be like, no, that's stupid. That'll never happen. And then you try to hire somebody and they'll be like, oh, I don't believe it. And you end up in this world where you're so constantly just trying to like prove that it's even possible that you can't get enough people joining you. You don't get enough energy to create those experiments. But in Silicon Valley, we just have a culture of saying, it could work, and that it could work lets enough people create some energy to try to do it that every once in a while it does. And the other thing to remember is for every great company like a Facebook or a LinkedIn or even a Twitter that have kind of made it through, there are hundreds and thousands that people did the same thing at the beginning, it could work. They even hired some people, they even raised some money, they might have raised a lot of money, and then they failed. And we often laugh at those failures. Juicero is a recent one that a lot of people were, laughing about. Could you imagine somebody tried to make a juice maker, charge $400 for it, and then deliver juice packs every week? That was like the stupidest idea ever. I can't believe they made $100 million. They raised $100 million to try to do it. On the other hand, it was a dude saying, could you imagine 1 billion people in the world drinking fresh juice every day delivered through these packs? And there were enough people who said, I could imagine that happening, that they did it. And that's part of what makes Silicon Valley so special. Right
on. So it sounds like it's a desire, and it's the belief that they actually have the power to build something here that can get in the hands of hundreds of millions of people and really change the world.
But it's really also the network of people around them that also believe enough to do it. People who will go work for them, people's wives or husbands or boyfriends or girlfriends. When you say, I'm going to go work for this company, they'll be like, that's a terrible idea. That company might be out of business. You might not make any money. What are you going to do for our family? But they say, cool, if you want to go take that job, seems like it's worth a shot. And they might have some funding. It's
Yep.
the lawyers who will go work for this company early and even not necessarily charge normal lawyerly rates because they know if it becomes a big company, they're going to be able to take them over the coals later. You know, it's the bankers who will help you. It's the office management who will give people leases on this kind of space. Like it's an entire ecosystem of people who believe that it still comes down to the founder, the employees, and then, you know, the investors are the primary ones. But the entire network and community is set up to allow that belief that it could work to actually be possible. And in most other places, you might still have a dreamer, and you might even have a dreamer able to get some money and get a few people along with them, but they still run into obstacles every other point of the way, and we clear almost all those out.
Right on, right on. What do you think are some of the kind of the threats or the biggest challenges of Silicon Valley that maybe stand in the way of its continued growth as an ecosystem?
You know, this is a great question. You know, I think on one level, you know, so much of this was dreaming it could be possible. Could you imagine a pocket computer in everybody's pocket that they can access all information at any time? Like, that's mostly happened. Can you imagine a network where you can talk to your friends and send them updates at any moment of the day and see what they're all up to? That's basically happened. Can you imagine that you can just walk out of any building and order a car and it'll just show up and it'll take you to wherever you need to go? That's basically happened. And so we're now kind of in this like period where we've had a bunch of dreams over the past 10 or 15 years that are real and at massive scale. And I don't think in Silicon Valley we kind of have sort of gone from just being dreamers to realizing that impact on the world, you know? You see every industry go through this reckoning where you realize sometimes the environmental impact of, you know, big food or the medical impact. You have the opioid crisis from big pharma and what they're doing. And I think as a technology ecosystem, we don't fully respect the impact and the emotional impact we're having on everybody. It might not be good for every 14-year-old to have the pressure of posting the perfect picture and looking great every day for Instagram. And if they don't get enough likes, then they don't feel their own self-worth. That actually may not be a good thing, and we might have created that inadvertently trying to bring everybody together and make them more connected that we actually have to go deal with now. So I think if we don't take action on that as a technology ecosystem, there will be a backlash. I think that's an important thing that's at risk. I think the other thing is, you know, look, part of the beauty of the dreams is if we believe we can make this product that's valuable, everybody will, you know, love it and will impact millions of billions of lives. But there's a lot of money that comes along with that now, and then money sort of changes a bunch of the picture. You have a bunch of people now who are like, I'm only in it for the money, or I'm going to do the thing that makes more money versus just that dream and vision. And I worry a little bit that, you know, it's expensive to live here now, it's expensive to maintain a lifestyle, and I worry that that's going to take a lot of those people who kind of have that early energy of just trying to do good for the world and make it hard for them or about the money. And then that will lose some of the net impact. And then, you know, these companies, if we think about the impact they're having, it might not be the best for their bottom line to try to make some changes that make 14-year-olds feel better about themselves. That might be the right thing to do for the world, but not to do for their finances. So that becomes another, you know, thing that we all have to balance.
Right on, good thoughts. My understanding is Greylock typically invests primarily here in the U.S., not internationally. Is that correct? Can you explain a little the thinking behind that? Why the focus on the U.S. versus, you know, many other markets? Especially, it sounds like you definitely admire a number of other startup ecosystems. Yeah.
You know, look, I think the first thing is it's hard to do lots of things well. And so, you know, you know, we think of this for every startup we work with. It's hard to do lots of things well, so do one thing really, really well, and you can make that impact. And for Greylock, you know, we're just a group of you know, 9 general partners. Like, there's only so many places and ecosystems and things we can be in that we can try to find the best companies and really help them grow. You know, because we're based here, we find that we can have the most impact on helping companies that are growing, at least in America, with our contacts, with everything else. We're actually investors in Musical.ly, which is headquartered in Shanghai. But, you know, it's a Western company, and we've been able to really help them extend their network and relationships in the U.S. and in the Western world. So we focus on companies we can really help build and try to maximize that value. And we've just found for us that that's majority been companies that are headquartered or focused on U.S. markets. So that said, we have, you know, Musical.ly in Shanghai. We have one called Cato Networks that's headquartered in Israel. We just backed a group called Entrepreneurs First that's based in London. So we look around the world, but we really try to centralize it, you know, in our hub and just do one thing really well, which is help great companies grow in the markets and with the networks of people that we most understand.
Right on. And you mentioned Musical.ly. Could you I guess that was as Greylock is focused on the U.S. and as you mentioned, Musical.ly is headquartered in China. Can you tell us a little bit more about like what impressed Greylock so much that said, you know, we typically focus on purely U.S. companies, but we're going to jump in really and support Musical.ly in a big way. I think you've been in numerous rounds of Musical.ly's growth. So tell us a little bit more about that thinking.
You know, I first met the Musical.ly team 2 years ago, June. 2 years ago, June. So I had been looking at the space of social video for a long time, given my background of Twitter and Facebook. You know, I've been paying attention to what's going on, and there was a whole set of changes happening in early 2015 around social video. There was a company called Dubsmash that was headquartered in Europe that had sort of blown up, and people were making funny lip dubs. But I saw a new behavior where people are using their phones to be creative, and they were whipping out their phone and creating a fun little video that they shared with friends that hadn't ever been done before. You know, most things shared on Instagram and Snapchat are like, look at what I'm seeing, isn't my life awesome? And that's very different than like, I'm gonna dance, I'm gonna play, I'm gonna sing. And so I looked at Dubsmash and decided that that wasn't quite the product and the network to invest in. We like to invest in networks, and Dubsmash was a tool, but it didn't kind of have a network component. And then I kept looking at the App Store and playing with new apps, and I saw this thing called Musical.ly that was growing, and I heard from some of my influencer friends that they were starting to use Musical.ly. And it looked like a Western product. If you had told me that it was built in Silicon Valley or Los Angeles, I would have believed you 100%. So I'm kind of getting to know the product, and I decided, hey, let's reach out to the founders and see if there's an investment opportunity. Find their email address. We have ways to kind of debug that. Send them an email. Get an email back. Said, hey, you know, Greylock, we've heard of you. And I was known as a growth hacker and had shown up on a website in China as one of the top growth hackers in the world. So when they Googled or they went to Baidu or whatever and searched my name, they found me. And they said, sure, we'd love to talk. I was like, great. Like, when can you meet up? And they said, well, I'm actually in Shanghai. Our whole company's here, but we have a guy in the U.S. So I went and met their U.S. guy. We had dinner like the next night, and then I got on a WeChat call with the founders in Shanghai. And within a few days, they were in the middle of an investment round. So I had to elbow our way in. We and GGV sort of elbowed our way into the round, and made the decision about a week, all through WeChat calls with the team, and I was blown away. They're under the founder, Alex Zhu, or Jun Zhu. He had spent a lot of time in the U.S., so he really understood both markets, and his ability to contrast what he had learned from the Chinese ecosystem and what he was seeing in the U.S. and why this was growing here was phenomenal. And I said, look, I don't care where the team's built. The product is amazing, and it's resonating with kids here. I think the one difference for us was normally in a case like that at the stage it was about 1 million daily active users at the time. We would want to lead the whole round and own as much as we can. And in that time, we syndicated it with Susquehanna Group and GGV because I was a little bit nervous about a company in China. So rather than trying to own as much as possible, we owned a little bit less to syndicate it. Lesson to me in the past is if you believe in the company, you might as well try to own as much as you can as an investor because, they've done incredibly well since then.
Mm-hmm. Right on. That's a great story. I appreciate that. So before you were at Greylock, as mentioned, you were at Twitter. Twitter, you were said to have led user growth by 10x while you were there. But right now, we're seeing some stagnation in the active user growth. If you were at Twitter, what should Twitter do aside from rehire you, which I think would be very difficult for them to do at this point? Aside from rehire you, what do you think Twitter should do to kind of get back on the growth train?
That's a great question. Look, I would still love to help Twitter grow. I mean, working at Twitter was one of the best periods of my entire life, just to be part of that product and part of that ecosystem. And what it's become, it's still the product. If I ever look at my iPhone and it shows you what's used by your battery, Twitter is so far number one for me, is just the most important product for me to connect with the world. When you think about growth, what I think a lot of people get wrong is products don't just kind of grow and then keep growing and then keep growing. You have to keep understanding new insights about people and understanding new insights about how you get to the next wave of people. They really grow in waves. If you think of Facebook, even at the early days, it got in college and it would grow in the college. But if they just said, let's try to grow for the whole world, it wouldn't have worked at all. They had to evolve the product and they had to evolve the way that they grew. What I like to say with Twitter right now is part of the way that we got Twitter growing is we made it easier to get started on Twitter. I think Twitter is a billion-plus user product, which means having a timeline that you have carefully curated the types of information you would like to be coming to you, and then you can check it anytime and it comes at you in real time. I think Twitter's an incredible product for getting information delivered to you if you've set it up correctly. But I think the hard part is most people, even if they think that promise is true, trying to set it up is really hard, and it's so hard it even scares them away. I think right now to get you going on Twitter, you have to manually follow or unfollow a whole bunch of individuals to try to get topics. Do you follow Barrett? Do you follow me? Do you follow Connie in the back because you want to hear about consumer insights or internet insights? Like, it's very hard to make any of these decisions on Twitter. What you really want to do is just like what you do with the local news or newspaper. I want stuff like this. I want news about my favorite sports teams. I want news about channels that I like. I want news about this type of technology. And then over time, you can refine it with more specifics. And Twitter has not made it any easier to get set up that way. And so without that, I think they're going to struggle with the current way that you set up Twitter, even though I think if everybody, I can sit with anybody and in about an hour get them a Twitter timeline that I believe they'll use almost every day. Right. But getting everybody to do that on their own is hard.
Yeah. Okay, now I want to shift gears to the other company you are a really key contributor at is Facebook. Facebook currently really is, these days I feel like is executing very fast, rolling out features on Instagram, on Facebook Live, all sorts of different new features very quickly. But many of these features we've of course seen on other platforms, many of them coming directly from Snapchat. Do you think that, and actually, I think, let me add to this, I also saw what your investor in House Party, right? They just launched a kind of a clone of House Party yesterday, right? So how do you see Facebook, can they continue to just be the fast second mover? Or do they need to be innovating? And how does this impact the ecosystem with them kind of, in some ways copying innovations created by other companies?
Look, I think the first thing we should just be totally clear about is like our entire industry has been based on learning from each other and being inspired and constant stuff. The original Apple Macintosh was inspired by things that Steve Jobs learned at Xerox PARC. Android, you could say, is a ripoff of the iPhone, or is it a learning in a way that's created an entire ecosystem based on learnings from there, but then they do it differently, and Android is more used than the iPhone because of the differences. But there's still a lot of learnings and similarities and innovations that Apple has done. And so I don't think that this sort of learning from each other is bad at all. Okay. If you think of Facebook, their model is we want to give every single person in the world the way to connect with their friends and their community. And so if there are other people who are innovating and finding ways to connect with their friends and community, but I've already established my friends and community on Facebook, but I realize, hey, I can't talk to them with live video, or I can't share ephemeral pictures with them, or I can't share stories with them, Facebook either has to go, well, because we didn't invent the story format or get group video chat right, we can't ever bring that to our users. Like, of course they have to bring that to their users. And I think the real challenge for other companies is, can you actually build something that is resonant, is different, grows fast enough, causes people to want to have a different community or a different set of people, there. So if you think of House Party, can we get a different set of communities that want to live on House Party that aren't actually interested in doing that same type of thing with people on Facebook? Now, the one place where I get disappointed with Facebook is when they get too close to copying. Like, at some point, like, if you can look at the two apps and you can't tell the difference, it's like, come on, Facebook. Like, you could innovate a little bit, but in terms of, like, if Snapchat unlocked something great with stories, of course Facebook should try to figure out how to make sure that its users can do that. And in fact, Instagram was drying up. People were afraid to post on Instagram. They didn't want to post too much. They needed a way to let people post more and capture more to their Instagram community that was already there. And stories became a great way to do that, and it's done incredibly well for them. Okay.
Do you wish that Facebook did more acquisitions instead of kind of copying a product on some level or heavily learning from it? Do you wish they did more acquisitions?
I think every company has always gone through the challenge of build, partner, buy. And whenever you're trying to do something new or enter a new area, you do that. In the case of Instagram, they realize we're never going to build a mobile social network that'll compete. We need to buy it. In the case of WhatsApp, they realize we're never going to build a worldwide chat system that will be able to grow as fast and catch up. Let's buy it. In the case of Messenger, they actually bought a little company called Beluga and said, hey, instead of just trying to build our own messenger, let's buy these guys that have done a very nice job, and scale up from there. Right. So they've done a lot of buying, and I think they've done a lot of building. I think the nice thing with Facebook right now is they have so much money, they can hire a lot of the best engineers and designers in the world and build almost anything. If you're a startup of 10 people, they can have a 10-person team up and running, really fast. So, they need to make their decisions.
Right. My last question before we're going to have a few minutes for questions from the audience. In a few minutes, we're going to have 10 startups that are pitching here. Of course, you have a lot of startups that pitch you. What are some tips you have for them? What are mistakes you commonly see startups make when pitching VCs?
Look, the first thing to know when you're pitching somebody is you're presenting an investment thesis, which is if you invest right now, there is a chance that you're going to have a massive company on your hands. And you need to actually help me understand what that massive company could look like, what your vision is for that, before you just get into your data or anything else. A lot of people don't take time to kind of think of it as an actual investment thesis, but when any investor hears it, the first thing they do is they walk back to their other partners and say, hey, here's the thesis here, do we believe it or not? That's number one. Number two is understand your data and the story you're telling to back up that thesis really well. In a pitch to a group, you're kind of just telling a very fast story that supports that thesis. That's great. When I'm meeting a company one-on-one, we'll just ask questions. We'll be like, if you show me a chart and it has a big spike and then it keeps on going, I'm going to ask, what's the spike? And I actually don't really care the answer, to be honest. What I care is, have you done the work where you've probably cared? Because if you're in a learning mode, if you're trying to figure out your company all the time, what are we going to do to make it work? What are we going to do to make it big? Every time you see anomalies, every time you see surprises, you should understand exactly what's going on and be able to explain it. So I'm mostly just testing you, how much are you learning about your data and everything else versus presenting it to me and expecting me just to intuit all of it.
Right on. Great tips. Okay. With that, we're going to take some questions from the audience. Feel free to raise your hand, and Ryan will bring the microphone to you.
Yeah, you great comments, Barrett, and it's great. So Eugene, John with TK Angel. So right now, as we see for the last 20 years, the early internet days, and now we have such a monopoly, as you alluded to early. In China, it's such a monopoly, and here it's also. A lot of people say today's cloud, we have the cloud, but whose cloud? It's just by a few people, right? So as we develop, maybe many internet pioneers, they start to look at this. This is not a dream they have. So my question is, as we look at all these companies, who could be the next a $100 billion worth company? If anybody doing a business close to Facebook, Google, they get crushed or get acquired early. So what's your view?
That's a great question, and it's one that I'm constantly asking and looking for. On one level, we have these great monopolies. On the other hand, they don't do everything. There's still so many other industries and so many other markets, and there's so much more to do with our phones. Our phones still feel like very 1.0. They don't have good context. They don't really tell us where we are, what's going on around us. They don't, my phone, I'm glad iOS 11 is going to have driving mode, because it's the first time your phone knows you're driving and acts a little bit differently. We're in the very nascent days of what all these can do. Look, I think there's a lot that might happen with augmented reality. What happens when I take my phone out and scan the room? There's a lot of new behaviors that will happen there. I think there's a lot happening at the edges of, it's called synthetic biology, but where data starts to meet science and health, but they end up looking more like software companies. We might see some very massive new platforms emerge there. Where everybody's excited about cryptocurrency, those are already getting close to $100 billion markets, and it's unclear what exactly those are beyond being a digital asset, but it's clear that it opens up some opportunities, and we're going to go through ups and downs as that gets figured out. And then, look, before Facebook, there was Google, and everybody's like, oh, what else do we ever need? We have search. And it was like, oh, we're missing a way to communicate and share all the time. There's going to be those same kind of innovations that will happen. I think the new big companies won't knock away Facebook or Google. I think that Facebook's got communication reasonably well handled. Google's got search and video reasonably well handled. But there's so much more still to come.
Great. From your story of investing in Musical.ly, I may perhaps have two related questions. First, what do you look for of number one features of an entrepreneur, or number 1, 2, 3 features of entrepreneur? And then the second question is, when you see entrepreneurs in Silicon Valley versus entrepreneurs in China. Have you seen the differences and similarities?
Those are two great questions. The first thing, what we look for in any entrepreneur is, really three things. We always ask, the two questions we always ask are why now and why you, and we like to have a very strong personal connection for why they want to bring this company to be very, very large and interesting in the world, and why now? Why can this be built now that it couldn't have been built before? In an entrepreneur, we're looking for somebody who has a big vision and is also able to compartmentalize it and understand the only way I get there is if I get this next experiment or set of experiments right. And so being able to both think in the future and think in the present is a very challenging thing, and that sort of bimodal thinking is very rare and special in the great entrepreneurs. The second thing we look for is learner, somebody who's constantly learning. That's why I said about the data example of like a spike in data. It's just, are you constantly learning? Are you meeting great people? Are you trying to be smarter and learn how things work all the time? And then somebody who understands the power of a great team. Because you're only as good as yourself as an entrepreneur to get so many things going. You need great people around you. And so those are the three things we look for. I think contrasting the U.S. to China, I think the work ethic in China is, the entrepreneurs I know work really, really hard. I think there is another level for both the founders and the teams in China right now that I think is incredibly impressive. But in general, it actually comes back to those same core things.
As a VC, what are the most interesting trends are you currently following?
I think there's a whole bunch of trends that I am looking at to make an impact in 3 to 5 or 10 years. The biology stuff I talked about, the cryptocurrency. In the very near term, this fall, in the next 6 to 12 months, I think mobile AR, where you just whip out your phone and you look at the camera and it augments the world, I think is going to be a big, big deal. I think it's going to be the first new behavior. Right now, if I were to do this, you would all think I'm taking a picture, and I think it's going to change from taking a picture to, whoa, what's he seeing in there? And you're going to want to whip out your phone and try to see what I'm seeing, or come look behind my phone to see what I'm seeing. And I think that's going to open up some really massive new behaviors for us. I think that's exciting. Look, I'm also seeing lessons that are happening in China. The bike sharing that's happening in China is starting to come to U.S. I think there's a lot more still to disrupt locally around transport.
We all know that Facebook is a great company that provides good products for consumers, but it also sell ads as its business model, which generates good profits. But I started to find that ads on the mobile phone bothering me, and as kind of a tradition in the industry, when we see a company that bothers the users, it's also hurting herself, giving the opportunity to the next startup or product. So what do you take on this?
I think this question about advertising is a really interesting thing. I mean, advertising is one of the best forms of, if you have a brand or a message you want to get out there, paying to get a message in front of people. And actually, as consumers, a lot of ads are actually really good. We learn about new restaurants. We learn about new products we might want. We learn about new experiences that we could have. If you aren't, in a world without advertising of any kind at all, try to imagine that world and think like you might not ever actually find anything new. And this goes all the way, like you go to a supermarket and they're, advertising on their pack. I mean, they do promos in the front of the store, everything else. So I don't necessarily mind ads, but I do think we're getting to a place where the tracking and sort of the data that is like trying to find your eyeball and like monetize it wherever it can is sort of getting too much. And we are seeing users react. And the best way to react is to have users pay for things instead. I'm starting to see a lot more companies, one I'm involved with, that we haven't announced the investment yet, that is a subscription product for entertainment on the phone, not about advertising at all. It's about trying to just deliver you content that you pay a few bucks a week or a month for. And if you pay for it, we're not going to just keep shoving ads. And if we can build a good business model that way, it's actually better than an advertising business model. In that product, though, we've actually put in a model where you can pay, or you can choose to watch a 30-second video advertisement. Instead, a lot of people opt in to do that still. Now, for startups, the scary thing is building an ad business is hard. You have to be at massive scale just to do anything. And really, Facebook and Google command 80+% of the ads market. So for any startup that says they're going to get big on the ads market, I get even more worried. And I like these models now where people pay for or do other things.
Fascinating. Thank you so much. Let's give a round of applause to Josh and Barrett.